Hi, welcome back to channel P2G. Plan to grow, prepare to grow, and persevere to grow. And in this channel, as usual, I am coming up with a knowledge series on banking. And that in that knowledge series, we have already covered in season 2 two videos understanding the overview or structure of Indian financial system, and next video we have covered about the different type of banks as one of the pillar in a financial system, that is a financial institutions. What is a bank and what is other financial intermediaries, that is what we are trying to learn in this video. And naturally a question comes to in your mind that what is the difference between the bank and the non-bank finance companies. Let's understand it in a very simple way like this. Banks are defined or regulated or structured under the Banking Regulation Act. Section 5B of banking defines banking as accepting deposits for the purpose of lending or investment, accepting deposits for the purpose of lending or investment, and the deposits such accepted are repayable on demand, withdrawable by check or draft or order or otherwise. So this is the definition of banking, and banking has got a critical element of accepting deposits which are repayable on demand, and that's what is not possible with NBFCs. So non-banking finance companies cannot open or cannot accept the deposits from the public in the form of a savings bank account or a current account. Means no checkbook can be given by a non-banking finance company. That's number one intermediary, that is a non-banking finance company other than bank. Second intermediary is a mutual fund, and a third intermediaries are insurance companies, and there are pension funds, provident funds are there, then there are stock exchanges. So that's what we are going to discuss in this video. So what is NBFC then? NBFC is a financial institution which carrying a business of financial institution as per the NBFC Act. Section 45 1C of RBI Act defines the financial institution, and a non-banking finance company carrying business of financial institution will be a NBFC. So what are all the activities can be there? There can be in financing, whether giving loans, advances or otherwise, or the activity can be acquisition of shares, activity can be hire purchase, activity can be insurance, but insurance is specifically excluded by notification of the Bank of India. RBI excluded it. Then chits, nidhis, okay, all these are NBFCs. So, but how to consider a particular institution as NBFC? Principal business of that particular industrial or trading activity, if it is there, then it can't be treated as NBFC. Means any organization, primary business is trading, primary business is industry, and a secondary business they are involved in taking deposits and giving loans, then it can't be considered as NBFC. Then majority of the assets and majority of the income, if it is from the financial assets, then only it can be considered as non-banking finance company. And the assets and turnover are the only indicative but not the definitive test of NBFC. So NBFC primarily should be engaged in the financial activity, but it is not a bank. Why it is not a bank? Because they can't accept the deposits which are repayable on demand. Now next question, can NBFC accept deposit? Yes, there are many NBFCs which are deposit accepting, and Reserve Bank of under the specific permission from Reserve Bank of India, they can definitely accept it. Now next is, who governs the NBFCs? NBFCs which are deposit taking and NBFCs which are domestically important. Thus these NBFCs are governed by Reserve Bank of India, and there are specific activity in those NBFCs. For example, housing finance. Housing finance companies, though they are NBFCs, are regulated by National Housing Bank. NBFCs which are involved in insurance activity something, then they are regulated by Insurance Regulatory Development Authority. And as you know that many large NBFCs are emerging in the recent past. For example, Sriram Transport Finance, Birla Finance, Tata Finance, Sundaram Finance, Bajaj Finance, DLF, Religare, all these are non-banking finance companies where you can easily get the loans like a banks only. As the bank works, they also work. What is the difference between them? The NBFCs cannot accept the deposits which are repayable on demand. Then let us understand something about the mutual funds. And let me tell you, I have just given you a very brief overview of NBFCs. There are many type of NBFCs. Investment companies are there. Housing finance companies are there. There are many NBFCs are there. I have not dealt it. Let's confine our talk only understanding the Indian financial system. Next is the mutual fund. Mutual fund, I think majority of the people are aware about it now, but few years back people were not aware. And what happened now? These mutual funds, they help the small investors to make money through the stock exchanges. Means they enable people to invest money in the stock market, capital market, and out of that earnings, of that money which is pooled by different people, then that money will be distributed as dividend to the people. So that's how the mutual fund is nothing but an organization which collects money from the different people and acts as a representative of those people in a stock exchange. Therefore, these companies are also known as asset management companies. They are known as asset management companies, and there are different mutual funds as on today are operating. List can be AIG, Baroda Pioneer, Birla Sun Life, Canara Robeco, DBS Chola, L Davis, Fidelity, Fortis, HSBC, HDFC Mutual Fund, ICICI Prudential, IDFC Mutual Fund, JM, Kotak, Magnum, Mire, Morgan. List is endless. Okay, I don't think there is any purpose is there. But one thing I just wanted to tell you, that these mutual funds, they also have a different type of investment schemes, and as on today more than 1,000 different schemes by these many mutual funds are introduced. Within this mutual fund, different products are normally like this. Equity products are there, bond products are there, and balanced products are there. Means what? Equity is the money which is invested in shares of the another companies. Such funds are known as equity funds. And balanced funds are those funds where a part of the money is invested in equity and part of the money is invested in bonds, so that the earnings will be balanced. Means there will not be big risk of share prices coming down. Then third is only investing money in the bonds, where there is a regular flow of income will be happening. So that's how different schemes are there, different products are there. I'm sure you can understand about this by visiting a respective site of the particular mutual fund company. And there are number of mutual fund companies, therefore I am not that much deliberating on that. Now next is the insurance companies in India. What is that insurance company means? An insurance is a protection provided to either the person or the property. Now when the protection is provided to the person about his death, then normally it is called as a life insurance. Means a protection in terms of finance on happening of contingency of a death of a person is a life insurance. Protection to theft, protection to fire, theft or burglary, something happens and property is lost. So in such cases, a protection for that in terms of money is available from the non-life insurance companies. I think majority of you know that motor vehicle insurance is there, car insurance is there. That is nothing but a non-life insurance. And there are reinsurance companies. So as on today, there are life insurance companies are 24. One is a public sector, that is a LIC, Life Insurance Corporation of India, and there are 23 private sector. What is this public sector and private sector? Public sector, again let me repeat, the insurance companies wherein ownership and control is of the government, means more than 51% of the shareholding of this company is with government, either the central government or state government, then it is known as public sector. If it is in the private hands, then it is a private sector. Life insurance company 1 public sector, 23 are private sector. Non-life insurance companies, there are as on today 4, but by the time you are watching this video, there is a possibility that 1 or 2 public sector company, this in non-life insurance companies might have got merged, and there are 30 private sector non-life insurance companies are there. And there is one insurance company, that is a reinsurance company. Means these insurance companies, as I told you, life and non-life insurance companies, they themselves can get protection by paying some premium to that another insurance company, and that's why that insurance companies are called as reinsurance company. And as on today in India, there is only General Insurance Corporation is one which acts like that. And regulating authority for this is IRDA. Regulatory authority for mutual fund is SEBI. So that's how this operations of insurance companies happen in India. And next part is, let me tell you about the stock exchange. So which are all the stock exchanges in India? There is a Bombay Stock Exchange, there is a National Stock Exchange, there are commodity exchanges are there, India INX, CSE, India Commodity Exchange. India Commodity Exchange basically deals only with the commodity derivatives. What is this derivative? We will understand at a later stage in one more video, but at this juncture I don't want to take you from the normal track of this subject. There are Multi Commodity Exchange India Limited, National Commodity and Derivative Exchange India Limited are there, and in addition to that there is a NSE, IFSC is also operating. Then last but not least is the primary dealers. At primary dealers, this system introduced by Reserve Bank of India in 1995 for GSEC market. What is the GSEC market? Government securities market. How these government securities, how they operate, we have got an exclusive session in the name of money market, and in that session you understand what is this government security means. But as of today, as on today, for this particular video purpose, remember this particular system is introduced by Reserve Bank of India for government security market, and these are nothing but these dealers are registered entities with Reserve Bank of India. They have license to purchase and sell these government securities in the open market operation. Again a new word. Again on this word we will understand when we will talk about the Reserve Bank of India. So this is all there. In addition to that, even all scheduled commercial banks except RRBs are also permitted to act as a primary dealer. As on today there are 14, and in next video let us try to understand in detail. We have just understood about the regulators in a very brief way. In the next video, let's understand something more about Reserve Bank of India, and thereafter in the subsequent videos, the other regulators, SEBI, National Housing Bank, PFRDA, NABARD. Thank you so much for being with me.